Good evening, friends. In our 11th Corporate Law webinar series, we have started discussing about SME listing. And for each week, we have started understanding and analyzing about SME listing to know answer for each question that we have more from the practical aspects to it. Last week, we did discuss about what are the eligibility criteria for SME listing. Now that we have ascertained what are the benefits available for SME listing and what are the criterion upon fulfillment of which we can get into this particular mode, we will now see what are the steps to be taken prior to your SME listing. My humble thanks to my team, Aishwarya and Jitesh, for this research and the detailed presentation. Couple of legends which are being used in today's presentation for our reference. The schema for today's session will be, we will deal with the general conditions which are applicable for listing. Then pre-IPO, what are the pre-IPO criteria for listing and what are the disclosure norms in the offer document? How you need to file the offer document. Here there is a biggest benefit available whereby the ICDR regulation clearly says that you need to wait only for the in-principle nod from your exchange and you need not wait for the nod from the board. The regulation clearly provides. So that is additional benefit available for this DRHP. That is your draft red herring prospectus. The pricing guidelines as applicable to any IPO. The issuance conditions and what are the procedures ascribed to it, and the advertisement. Of course, the advertisements shall be in the prescribed format as driven by ICDR regulation. And we will close the session with the topic on opening of the issue. What is the band of the minimum and maximum period for opening of the issue? Now let's get into general conditions. Last week, we started with this chapter in ICDR and we studied Rec 228 to 29 dealing with more on the eligibility criteria. And today we are going to start with Rec 230. Here it says that application to one or more SME exchanges for listing. Currently, we have observed during the last session that there are two SME exchanges, the NSE Emerge platform and BSE SME platform for such SME exchanges. And out of which, like any other IPO, you need to select one exchange as DSE, that is your designated stock exchange. And more importantly, the shares have to be dematerialized. So dematerializing the shares which are already issued and what are proposed to be issued. So you cannot be holding it in physical form. Partly paid shares should be converted into fully paid. Like how in bonus issue, you can't deal with a partly paid share. While you appear for SME listing, please make it fully paid up. And specified securities shall be held by the promoters in dematerialized form. When you look at the specified securities regulation, in your ICDR regulations and in your LODR, it is none other than your equity and convertible securities. The convertible securities could be your CCDs or CCPS. This is interesting, friends. 25-75 criteria. What is 25? You have the issue proceeds, say 100 crores. Out of 100 crores, not exceeding 25 crores should be used for your general corporate purpose. Friends, in your offer document, one important clause is the object of the issue. While you're having the fund for your issue proceeds, what is the objective and what is the rationale behind utilizing this particular fund amount, you need to state in your offer document, and you shall certainly provide the details if there is going to be any variation from the issue proceeds, and your board audit committee, the terms of reference clearly will talk about the variation. So you can't afford to deviate from the proceeds utilization, the objective as ascribed to it. So 25% for your GCP, general corporate purpose, and firm arrangement of finance towards 75% of this particular stated means of finance for the project. What is project? The project is nothing but the object for which the issue proceeds are being raised. An issuer shall accept bids only using the ASBA facility. We've already provided the definition of ASBA for your reference in the manner as prescribed by SEBI. And security deposit. Before opening the subscription list, you may have to deposit at least 1% of the issue size as security deposit, the issue size which is available for subscription to the public in the manner as specified by the board and or stock exchange. Of course, this security deposit shall be refundable or forfeitable in the prescribed manner. The next regulation 244 deals with your appointment of intermediaries for this purpose of issuance. Merchant bankers as lead managers to the issue. They are your lead managers. You can't do anything without consulting the lead managers. In the concluding points to be noted, we are going to see that. And there is additional point like any other IPO listing where at least one lead manager shall not be an associate of the issuer. What do you mean by not an associate? When you look at the SEBI regulation, the merchant banker regulation, Reg 21A talks about who shall not be an associate. It clearly says that he shall be an independent party, for which they are giving 3 criteria. 1, neither the issuer nor the other party, that is this merchant banker, shall be related, that is they shall not exercise control over the other. 2, there shall not be any common directorship between the issuer and this particular merchant banker, the lead manager to the issue. It of course excludes your nominee directors. It also includes your holding or subsidiary company, not only the issuer company. Point to be noted. The third criterion for this associate is when it is the issuer company or this including the subsidiary holding, like your second criterion, and the other side you have the merchant banker, and the control directly or indirectly put together by these two parties not exceeding 15% of the voting share capital. So if you are going to not fall within these 3 criterion, then you might as well can be the merchant banker or lead manager to the issue. Then when the issue is through book building process, appoint a syndicate member, and for any other issue, appoint the banker to an issue. Registrar to the issue having connectivity to all the depositories. So RTA is mandatory. Of course, like any other IPO, you need to have the compliance officer who shall monitor the compliance of the security laws, and for investor grievance more particularly, they shall record the redressal and they shall also submit the response to how these grievances are for the aggrieved investors are redressed. Then comes your 245, the disclosure obligations. The lead manager shall fulfill the disclosure obligation of the issuer, promoter, and the directors. The selling shareholder, if it is an offer for sale. When it comes through OFS mechanism, you have to certainly fulfill the disclosure obligation of the selling shareholder. These disclosures shall be in compliance with whatever is the obligation as provided under your Companies Act, and it also talks about your Schedule 6 Part A of this ICDR regulations, where you have the prescribed format for the drafting of this offer document and what are the disclosure norms to be met with while you do this offer document before filing it with the ROC or the board or exchanges as the case may be. And lead manager shall exercise thorough due diligence. So the pre-IPO process, friends, please remember that it very well includes the due diligence which the lead manager has to take care. Why it is important? Because he has to provide the due diligence certificate. You're going to see in the next slide that pre-IPO, due diligence, filing of offer document. While filing the offer document, the due diligence report is also mandatory attachment along with additional obligations as provided in your ICDR regulation. While providing the DDR, he has to confirm the adequacy of the disclosure obligation and the veracity of this offer document. Now comes the filing of offer document. When it comes to filing of offer document, this offer document will be first filed with your MCA and then you will be filing it with the stock exchange. Filing a copy of the offer document with SEBI through your lead manager. Friends, as mentioned earlier, everything will be routed through your lead manager only. Both hard copy and soft copy. As the regulation clearly says in the end that Though you provide the soft copy, provide the hard copy as well. And this regulation also talks about very clearly in 246 subreg 2 that board shall not issue any observation in the offer document, which is an additional significant benefit to them. Because why? For any other listing, you may have to wait for the board to give the in principle nod. But here, you just wait for the in principle nod from the respective exchanges. You need not wait for the board to give its observation on the offer document. And issuer and lead manager shall ensure that the offer document is posted on the website. So in Rec 246, it talks about how you are going to disseminate this information to public. You need to ensure that the contents are the same as that which is submitted to your MCA, SEBI, or your respective exchanges. Due diligence and obtaining in principle approval from the stock exchange. Due diligence will be conducted and the DDR will be submitted along with additional confirmations by none other than your lead manager, and your DDR will be in the form as prescribed, the Form A of Schedule 5 as provided in your ICDR regulations. And the additional confirmations will be in ICDR, they provide a prescribed form called Form G. Next comes your pricing mandate. Face value shall be disclosed in all the documents with the price band and the issue price in identical font size, which is more a specification, and the pricing along with the cap, the ceiling limit in case of convertible securities, all those are as prescribed in 248 to 251 regulation. So the cap of the price band and the coupon rate in case of convertible debt instruments shall be equal to or not less than 120% of the floor price. And issuer could also mention the price band in the offer document and the floor price in the RHP, red herring prospectus, and determine at a later date. So he also has this particular benefit of determining the price at a later date while fixing the price band. Before filing the prospectus with ROC, he should certainly complete the exercise. Differential pricing is allowed. Reg 251 clearly says that subject to fulfillment of those conditions as provided in ICDR, the differential pricing is permitted. The issuance condition and proceeds. Here, friends, remember that the regulation clearly starts with the statement that the minimum public shareholding as provided in your Rule 19(2)B of SCRR, your Securities Contract Regulation Rules, shall be certainly adhered to, which means your 25% of the minimum public shareholding is certainly required to be complied with. Over and above that, what you have is the remaining offer category that you have. And here it talks about the allocation in this particular manner when it comes to book building process. Allocation in the net offer category shall be as per this chart, where not less than 35% to retail individual investors, not less than 15% to non-institutional investors, and not more than 50% to QIB. Who are QIBs? Your qualified institutional buyers. Again, the categories of QIBs are as defined in your ICDR regulation, and 5% of this particular 50% chunk should be to mutual funds, because you have several funds over there in the QIB list, and 5% of that shall be allocated to your mutual funds. However, this regulation clearly says that unsubscribed portion in A and B, that is your retail category or non-institutional category, could be allocated to applicants in other category as well. And in addition to 5%, out of 50, we said 5%, no, it shall be eligible for allocation of balance available. So if there is a balance in that 50%, that could also be extended to your mutual fund category. This is issuance condition as provided in your Reg 253. We are continuing with Reg 253 in the next slide as well, where the allocation of net offer category is in the case of issue other than book building process. Minimum 50% to your retail individual investors, and the balance to individual applicants other than retail individual investors, since they are already allowed or allocated this 50%, and other investors, which includes your corporate bodies, institutions. And here, this additional comfort is provided that if there is any unsubscribed portion in any of the buckets, then it could be allocated to either categories as the case may be, both in A or B. Then comes your issue-related advertising. Issue-related advertising The format shall be in the manner as provided in your ICDR regulations. Here, after filing the prospectus with ROC, the pre-issue advertisement shall be made in one English paper, one national daily, and one regional language newspaper. And the issuer may issue advertisement for issue opening and issue closing as well. And during the period when the issue is open for subscription, it is very important, like any other issue, that no advertisement should be released which leads to a deceit or malified intention for the public to have an impression that the issue is fully subscribed or oversubscribed, or indicating the investor's response. So you should exercise a cautious approach in this regard. And issue closing shall be made only after the lead manager is satisfied that 90% of the offer is subscribed and a certificate is obtained from RTA to the effect that the 90% of the subscription is done, prior to which you shall have a cautious approach again here. Opening of the issue. The issue shall be kept open for at least 3 working days and not more than 10 working days. And in case of revision in the price band, we saw the price band in the pricing statement. So shall extend the bidding period disclosed in the RHP for a minimum period of 3 working days. In case of force majeure, issuer may extend the bidding period, but for reasons to be recorded in writing, like your COVID, where there is a force majeure situation which is beyond your control due to an act of God. In such circumstances, you could extend the issue period. The minimum sum payable on an application per specified security shall be at least 25% of the issue price disclosed in your RHP, and reservation on competitive basis is also available as provided under Regulation 254, subject to the conditions as clearly mentioned there. Before we conclude, I'll be happy to take your questions. Otherwise, we'll move to the concluding note on the steps to be taken prior to SME listing, friends. No doubt, SME listing provides a lot of benefits. You don't have a grading mechanism where the credit rating is mandatory, unlike your other lists. Point number 2, underwriting. 100% underwriting is guaranteed, which provides for higher liquidity. Point number 3, it provides for smooth financial hub for both investor and the trader. Why? Because of the market making mechanism. Here, in order to protect this SME listing and in order to promote a lot of MSMEs to get into this field, the market making is provided for a minimum period of 3 years. And this arrangement shall also be disclosed in your offer document. And it is the responsibility of your merchant banker to ensure that there is market making for this minimum period, which is assured of 3 years. Thus, it guarantees higher liquidity and it will also promote better price discovery in this mechanism. And agreement with intermediaries, all intermediaries, no doubt, they shall be registered with the board, and the agreements as required to be entered into with all these intermediaries, be it your market maker, RTI, your banker to the issue, syndicate members, lead manager, everything should be as per the respective regulations. So you have to go to the respective SEBI regulations and confirm in line with those specific regulations over and above your ICDR regulation. Thus, NSC emerge clearly says that for this particular listing, to comply with this SME listing, you need to comply with all the acts, all the regulations, more particularly your Companies Act, your Securities Contract Regulation Act, your SEBI regulations, primarily the chapter dealing with your ICDR regulation, and of course you have to comply with your listing disclosure and obligation requirements under LODR post listing. So we will be taking up yet another topic on SME listing during our next Wednesday webinar session. Until then, take care, stay safe, friends. Thank you so much.